April 22nd, 2024. I thought the rally today was relatively expected. If you watched my video on last Friday, I mentioned that I thought we were going to end up with some sort of bounce next week. I did not think we would bounce this much this quickly and this far away from 5,000. The fact that we did that makes me think probably some point later this week or maybe early next week, we're going to test back down to 5,000. I think we're going to be in a trading range for a little while around 5,000 before we make any sort of move. But yeah, bull trend day to day. I thought the gap up was disappointing in a way. I thought we were closed around 5,000 last week, and I was expecting a reversal up from below. So what did I want to see? I wanted to see basically no gap or a small gap down, and then a reversal up from down here as I was expecting a rally and hope to get out maybe somewhere up here. But instead, what we got was a gap up. When I get a gap up, when I'm hoping I don't get a gap up, I expect a trading range because that was the bullish edge. The bulls had an edge down here since we were oversold and the bears breached the magnet, and we're probably going to look to take profit soon. So when the bulls have an edge, I look for the to buy, and instead we got a gap up. So I thought that erased some of the bull edge. So I was either looking to buy, some sort of wedge like we got, or look to buy if a strong bull trend started. But I was not expecting this, and there was a couple of keys I think to the fact that this might be a bull trend. I think one was the open gap between the 18 high and the 25 low, the open gap here. The fact that this was a 13 bar micro channel, meaning we didn't trade below another bar for 13 bars. And I thought bar 42 was particularly interesting, considering that after we got this, usually if you're at the top of the trading range and you get this and you start to go down, it's going to go sideways for an hour or two before it makes any moves. But instead, we just kind of started to rally immediately, which was really unusual. And I thought 42 was when the market clearly went back to always in long and you could start to look to buy. And really, you don't really have to get out until up here. So if you're an always in trader, this is the kind of day that you make your money on. Bar one, a bear bar closing near its low. We got bad follow through on bar two, a doji bar, relatively expected. Bar one, you're hoping it's the high of the day. It's generally when you get a bar like this, it's better to sell above the bar than it is to sell below the bar. Usually, you're going to get stopped out if you sell below the bar. And then it'll, turn into some sort of trading range. So generally better to look to sell above the bar than it is to sell below the bar. Bad follow through two, and then another big doji bar on three. What do you do with three? I don't think anything. Big gap up and a high one on bar three, but I don't really think it's all that strong. I'd rather wait and see the follow through. And we get follow through on bar four, but it's not enough. I need to see a strong bull bar closing above the one high. And my big problem is this close from yesterday. There were bulls who bought this close, and it wasn't an unreasonable thing to do to buy this close. And they scaled in, and they know that maybe they bought more around 5,000, and they know that we're probably going to get back to this price. And if we do, they might sell out of their longs because they're disappointed with how big this sell off was. So I thought it's better not to buy above here and wait to see if five is a strong bull bar closing above this high. And if we got another bar on five that was identical to four, then I would look to buy. But five, instead, a disappointing bar closing somewhat near its low. I just see a trading range. Since it's a trading range, I'm expecting us to get back to the three high since the market tests swing points in trading ranges. Why does it test swing points? The same reason it closes gaps. Traders are going to fade swing trades in trading ranges, thinking that they're going to fail. So they'll sell above three, they'll scale in higher, maybe at a new high of the day, and expect the market to get back to the high of bar three. And that's why we bounced a little bit on bar 10 when we got there. Six, a bear bar closing near its low, but I'm not selling. I need really good follow through after this surprise. I think another problem with six is you're selling, and we're probably going to find buyers at this three high or maybe the two high, so it's hard to do. Second leg up on seven to a new high of the day, but what did I say? Probably better to sell above one than it is to sell below one, and that holds true here. This looks like it might be some sort of second leg trap from four. Four was big enough for a second leg, and we might be getting it on seven. So bulls need a lot of follow through if we're going to get a rally. And they get a disappointing bar on eight, essentially an outside down bar. So I think that we're in the trading range now. It's a double top for the bears with six, but I'm not looking to sell or buy really. I would just rather be flat. Nine does something interesting. So if you bought the close of seven, you could have scaled in below seven, and then nine, big tail, would have let you out. So clearly a trading range here, which is why, even during seven, I was expecting us to get back to the three high. Nine, a bear bar, but not really worth selling. I'd rather wait. 10, a bear bar, but we have tails on 8, 9, and 10. So if you're selling here, you're betting on what happened. You're betting on a breakup below this bear channel, and it's not after three straight bear bars. I suppose it's not theoretically the worst thing in the world to sell, but I wouldn't sell there. I would just rather wait. I think this is a trading range open. And then we get a big surprise down on 11, but finds buyers at the moving average. 12, another bear bar, but a disappointing tail on the bottom, right? So it's not quite right? If you're a bear and you're looking to sell, this isn't really exactly what you want. And that's your sign. It's a trading range. There's one other big sign that you should be aware of is that you can see we're in an expanding triangle right now. And when you're in an expanding triangle, you want to buy reversals up from the low and sell reversals down from the high. You don't really want to, sell down here and then get stopped out. 13, disappointing. I think after traders saw 13, they were hoping that we were going to get some sort of maybe one more leg down and then a rally. And instead, too many traders front ran it, and we got 14, a bull bar closing near its high. I don't think you buy 14. It could be a second leg trap. You can see 11. We went up on 11, down on 11, up on 12. So it could be 2 legs up and a pullback from the sell-off. This is strong enough to get a lower high, so I wouldn't be looking to buy here. Disappointment 15, relatively expected. I thought the highest point the bulls probably could have gotten was the 11 high. And then 16, a low one short. Am I selling 16? Probably not. I'd rather wait. It's a doji bar. We are always in short. We never really went always in long, but I would just rather wait. 17, a big bear bar closing near its low. I think 17 is an okay sell. My problem is it might be a wedge, 312, 17. But for always in, I think okay to sell 17. And if you get a bull bar, just exit. And you did get that bull bar on 18. I thought 18 would have been a really good buy. It's a wedge. You have small risk and, a reasonable swing trade. It's just taking a chance that bar 18 reversal, we get an upside break out of the 18 bar range. So you're trying to make 5 or 6 to 1 on your trade, meaning, it's probably not going to happen, but with the risk reward, the probability is worth it. Additionally, when you have a signal bar that's really small, a lot of times it makes more sense to use a stop measure move down. So had we traded above 8, I probably would have used a stop here until the move had clearly started, because sometimes it'll trade down, trap those traders out, and then go. Disappointment on 19. You can see we never triggered 18. I think the bears knew that 18 was a good buy. So what they did was they sold the close of 18 and tried not to let it trigger, and they succeeded. 20, follow through for the bears, more follow through 21. It's always in short, it's sell the close, but these are not super convincing bars, and we are pretty low. It's okay to be short for sure, but you want pretty convincing follow through rather fast. 22, disappointing doji bar, and then a bull bar closing near its high on 23. I think bears get out above 22. If we were going to go down, it's essentially, you can see it's a triangle at this point, right? You can see that it's a big triangle. And so what do you want to happen? You want to see a really, just a really climactic downside breakout, just, a complete dump basically of all of the longs. So you want to see a bar like 17 on 22 and just see the market start to essentially, like better word, waterfall down. You want to sell climax, but instead you don't get it. You get disappointment 22, bears exiting above 22, and you get 23. If you'll notice, we had the 18 bar range and a failed breakout below the 18 bar range. When you get a failed breakout below the 18 bar range, if you get a bull reversal bar within 5 bars or a bull bar closing near its high, traders will take the buy, hoping that we break up to the other side of the 18 bar range. And you get big follow through 24. It's okay by the close 24. I would probably personally wait for one more bar, because a lot of times, we might go a little bit more sideways here. But I think buy above 24, put a stop below 22, probably an okay thing to do. Big tail on top of 25, but still okay to be long. It is still minimum follow through, so some traders buy the close, and that causes the rally on 26. But 26, double top with 16, you can see we're at the top of one of the most recent sell climaxes, the 17 or 16, high or open of 16, I suppose. And so you might get some sort of resistance here, which we did, double top 27. But you notice bulls did the same thing. They bought the close of 27 the same way that bears sold the close of 18, trying not to let it trigger, knowing that bulls are going to exit below 27. So anytime you see a bar and you're thinking, if I was long, I would get out below that bar, it's theoretically a reasonable trade to buy the close of that bar and put a stop below. I didn't take any buys above bull bars today, which should probably sue myself for not doing that. But I bought the close of 27 today, and it's more lucky because these are low probability trades, right? So you can't buy here and expect to make money. But I bought the close of there, and I bought the close of 46 as well, because I figured bulls would just get out below it. So I thought 46 was the better of the two buys, considering the fact that that we had this, and this was a surprise, and we might just start to rally. A lot of times when you get a surprise like 42 through 45, you're sitting there and you're thinking, oh, okay, I really want to get on a pullback. I really want to get in on a pullback. And if you're sitting there thinking you really want to get in on a pullback and you're feeling that upside urgency, it's better to just buy the market. And you might get stopped out sometimes. I think that's one of the big things that traders, worry about is buying the top or selling the bottom. I sold the bottom today. I sold 21 and I exited here, and then I took my buys later and I made money. And because I wasn't scared of selling the bottom here, I wasn't scared of buying the top here. And so if you're not scared of selling the bottom or buying the top, you're going to do it a lot all the time for sure. It's especially part of the learning process. I've done it. I can't tell you how many times I've sold the bottom or bought the top. But if you're not scared of doing that, you'll find eventually you'll start getting in on trends while they're racing up, and you'll be able, do better capitalizing on these kind of moves. So if you sat out of this move today, just be less scared. If you think the market's at a trend, be less scared of buying the top or selling the bottom. Again, you're still going to do it. It's going to happen all the time, but you're going to eventually start getting in on these types of moves, and it'll get easier and easier. So I would just say, if you're worried about selling the bottom, just trade in the I don't care size. Even do it with one SPY share or do it on simulated account. Just anything to train the muscle memory. But anyways, 27, a bear bar, closing kind of near its low, and then a high 128. It's an inside pattern, 27, 28. We did trade above 26, but essentially inside 27, 28. I think a reasonable swing buy above 28, put a stop below. Since the bulls who had their stops below 27 are going to keep their stops there, okay to buy above 28 with a stop below. Follow through 29, 30, 31, really good for the bulls. I'm not sure how much higher we're going to go without pulling back. We are in a micro channel from 22. We haven't traded below another bar since then, and it ended up being 13 bars. So I think okay to just be trailing a stop below every bar at this point. 32, bulls will exit below 32. What happens? They buy the close. We get 33, closing near its high. An okay buy, but we're near the target being the high of the day. With this leg down, I'm expecting this to be a leg up in a trading range. We do have the open gaps, like I mentioned, right? Meaning the traders who sold above this high during 24 got trapped. Traders who sold above 27, they also should have made money, and they got trapped. So when you have traders who are doing reasonable things on limit orders getting trapped, you have to expect the market might break to the upside. And then you get 34, big tail on the top. We get to the target, traders exit. 35, the bear bar closing near its low. It's a few pushes up, but I'm not selling it. 36, tests back to the 34 close. So anyone who bought the close at 34, they wanted something like this to happen where you got 24 and then a pullback, and then we race up, and they wanted 33, 34 up, and then they wanted the pullback to be the 34 high and race up. Instead, you get 35, so they scale in below 35. They get out during 36. Second leg down 37, and then a high 2, 38. I wouldn't personally buy 38. I think it's a high 2 at the top of probable trading range, so I'd rather wait. That's why I didn't mark that buy. Is it always in long? Yeah, probably. Is it probably theoretically okay? Yeah, but I would rather wait for us to go sideways a little bit longer, or I would rather buy higher. 39, disappointing follow through for 38, relatively expected. If you're taking this buy, you probably should be able to scale in, but it's hard to scale in at the top of the trading range, so it's really not all that good. 40, a good bull bar, but a tail on the top, and then an inside bar 41. At this point, I was expecting us to turn down and start to go sideways, and then we got a surprise bar on 42, closing near its high. You got 38, 40, and 42, so it's potentially 3 pushes up, but it's a bull micro channel. It's pretty tight, and we're always in long, and we have the open gaps, so this is a surprise bar. I think it's an okay buy. I did not buy it today because I was making lunch, but had I not been making lunch, I would have bought it. But 42, a really good buy, I think. And it's reasonable to just buy below 42, put a stop below, maybe 41, or realistically, you can put a stop below 42 if I'm being honest, because if you think about it, like, should we trade down here if we're going to get the rally? If you're buying above 42, you're betting on something like this happening. So we shouldn't even trade below 42 if that's going to happen. So theoretically, the stop is down here, but, we should just rally straight up if we're going to go. So you got to be quick to get out, I would say. Kind of disappointing 43, big tail on the top, follow through 44, but a tail. Good for the bulls. We're rallying, but we're getting tails, so it could be disappointing soon. But we have 4 straight bull bars to 45, probably due for a pullback, and we do get the pullback 46. So now is kind of a decision point. Our bull's going to exit. We're going to trade below 46 and go sideways for a couple legs. If we did, my one thing was it was really early in the day still, so I thought we might, even if we went sideways, I thought we would probably still get one more swing today. And, whenever it's like bar 42, 43, and you've had a swing on the day and it's, the market's looking like, just trendy in general, you might end up getting another swing. And then sure enough, they buy the close 47 and huge bull bar 48 closing near its high. Follow through 49 and then inside bar 50, 51. We're pulling back because the risk is really big. Traders are concerned that 48 was a climax, breaking above the bull channel, and they're right. So 60% chance this is the end of the trend, 60% chance we get one more brief leg up. And this was part of the 40% where you end up getting another big leg up, 53, 54. And same situation, I think. 60% chance after 53, 54 that this is the end of the trend, 60% chance that we get one more brief leg up, which we did. But I think, it's hard to buy up here. If you're long, it's okay to hold, but it's really hard to initiate longs up here. This is so climactic. And, like I said, since this trend was, or I wrote it, but since this trend was so, unexpected, then it was reasonable to think that traders, we were going to get a deeper sell off because there were more bulls looking to exit. 54, an inside bar, or not quite an inside bar, but a failure above. 55, an inside bar. I think okay to just get out below 55. Maybe I'm dumb. You probably don't have to, but what are you trying to prove if you're still long at this point when we trade below 55? Maybe you're holding for that second leg up, but there could be a deep pullback, and it's like it's just not worth it. If you're long up here, you've probably already made a good amount of money. And if you bought above 53, well, that's the risk you took if you're taking a buy that deep in this range. 56, outside up bull bar, follow through 57, 58, 59. Probably buy the close 57, 58, 59, but I would let it go. I personally don't want to trade that. I think, if it rallies and just goes without me, that's fine. 60, a bear bar. Probably not worth a sell, but we're probably going to the moving average. So I wouldn't be looking to sell up here though. 61, you can see bulls bought close to 60, trying not to let it trigger, but they scalped out because we're so high, in this trend. We're so deep in it that we're probably not going to get another climactic break up the upside. So I would say probably like 70% chance at this point that we're going to start to go sideways after, 60, 61. And then we got outside down, 62. You can see bulls dumping longs. And once a lot of traders see 62, they flatten out the market. We get 63. Interestingly, we're still early enough in the day that we could, get some sort of somewhat sustained move, but I'm not sure what it'll be. The 51 high is a target because it's an open gap. Some traders sold above the final flag 51, scaling in, and they're looking to get out. 64, 65, basically right to the moving average, but big tails on the bottom, probably going to bounce pretty soon here. We might get to the bottom of the buy climax somewhere down here at some point. 66, big bull bar, and then disappointment 67, maybe a low one. Follow through 68, 69, but not that good. I thought we would go sideways for the rest of the day at this point. I would just be done for the day at this point. 70, a bear bar closing near its low. It's always in short. You can sell for a second leg down, probably trying to get here, or, I don't know, maybe be really lucky and greedy and get down here, which would have worked today. But I think better to just be done for the day. Follow through 71. You can see 71, 72 bounce just because we touched that high where that final flag was. But we didn't trade above anything. And then we got a dump 73. 74, this is just bulls exiting longs. And then we went sideways the rest of the day. For stop orders, I thought 17 was the first real credible stop order, but it wasn't really even all that good. 21, 23 or 24 is okay for a swing. I think 23 is okay for a swing. 24 is tough because you want it to be higher probability, but I'm not sure how much higher it is. So I personally wait for one more bar. Maybe 26, definitely 28, 29, 30, 31, 33. 33, okay, but probably exit at the new high of the day when we vacuum right there. You're probably, you buy above this, you get 5 points. I would probably just take it because this was the target. So you buy above here, we go right there. You have no true risk, just get out. I wouldn't personally buy 38, but maybe someone would, or someone did. 42, yes. Maybe buy the close, 43, 44, 45, 46, buy above 47, 48, buy above 50. You could buy above 53 if you want, or 52, 53 if you wanted, but pretty high up. And, probably reasonable to sell somewhere in here or sell this, but I would personally let it go. So the daily chart, it was a big rally, but a big sell-off at the end. So this just looks like a pullback to me. Are we done going down? We're probably mostly done going down. This will get a second leg down, but I think it's going to be more sideways. I would be surprised if we get too far from 5,000 to the upside or downside. I'd imagine we're going to oscillate around it for a little while. Now, this is pretty strong, so it definitely could get a decent, second leg down. But, I don't think we're going too much further down without continuing sideways first. So I would say for the rest of this week, I'm expecting pretty sideways. The weekly chart, bulls want an inside bar and a big bull bar closing near its high. Probably not going to get it. Bears want a big follow-through bar. Probably not going to get it. We were right at the moving average on the weekly chart. I expect a trading range. The monthly charts, we have about a week left in the month. A week worth of trading days at least. 6. So a little more than a week worth of trading days. This is really good for the Bears, but probably minor because of how strong this was.